holding company, if you have got, say, the main company in a building, in the same building, all other addresses are there of all the other, say, subsidiaries or associates, and most of them are really operating subsidiaries, and you are not charging any rent to those subsidiaries, the CGST, this particular clauses would attract, even if you are not charging anything, it would attract CGST on a notional basis, because they would say that you are supplying a service which is providing space to a subsidiary, you are not charging anything. The valuation rules of Rule 28 would trigger. And based on that, you may not charge, but you will still have to pay some GST on a chargeable basis or something. So when you talk of related parties, you are actually covering the gamut of all these things. And what is also important is the correlation between all of them. If you report something under AS 18 or IND AS 24 or under SEBI, and you don't think about the implications in the Income Tax Act or the CGST Act, then the government is easily going to pick up those transactions because you are reporting them in some place or the other, and try to find out what are the other implications. So if you report a payment made under IND AS 24, say to a subsidiary, then automatically it will get picked up maybe by the income tax or by the sales tax people, and say that is it at arm's length based on the Rule 28 of the CGST Act, which is there. So whenever you report something, maybe you report something on 48(2)(b), that itself could have indirect tax implications. It itself could have IND AS 24 implications in that sense. So you have to correlate everything whenever you are giving disclosures under related parties. And the maximum disclosure happens with SEBI, because every quarter, after a week of the board meeting, you have to give those disclosures to SEBI. Everything else is a subset of SEBI in that sense. For a listed company, the SEBI disclosures are the most stringent disclosures, which come not only once a year, but every quarter in that sense. Okay, so let's go to Companies Act. So we are going to go to 1 statute and see what are those individual provisions of related party and the transactions. So the definition of related party as per the Companies Act, the sections were all given earlier. This is a definition which is there in the main definition sections of the Companies Act. So it is a director or his relative, a KMP or his relative, a firm in which a director, manager, etc. is a relative, a private company, a public company, or any body corporate whose board of directors, MD, is accustomed to act in accordance with advice, directions, or instructions of a director or manager. It's quite a broad definition of what is a related party. It goes on further. Any body corporate is board is accustomed to act in accordance with the advice, directions, or instructions of a director or manager. And you may have a company which is located outside India. Say you have an entity in Dubai. You are not a director in that company. You are nowhere a shareholder also, but the person who acts there acts only on your behalf. Now that also gets covered as a related party. And this is where when you are auditing something like this, you don't necessarily look at the form. You also need to look at the substance as to who is the decision-making authority. Because if the decision-making authority is someone common who is also in India, it can trigger your definition of related party and all subsequent implications under section 177, 188, and the reporting under CARO. Because under related parties, your reporting really first comes under CARO, whether it's at arm's length and otherwise. So, and any body corporate which is a holding subsidiary or an associate, a subsidiary of holding to which also it's a subsidiary, so co-subsidiaries or something. So a very broad definition of what's the related party under the Companies Act, which is there. Now, what is the definition of a relative? Because if you see the definition, it was saying that a KMP or is relative, any director or is relative. Now, relative covers so many things: member of HUF, husband and wife, father, mother, son, son's wife, daughter, daughter's husband, brother, and sister. It's a restrictive list in that sense. If you look at the Income Tax Act, the definition would be different of who is a relative. So you'll have to make a very clear distinction as to, are you a relative under Companies Act, are you a relative under Income Tax Act, or are you a relative under, for disclosure purpose, under IND AS 24 also. Who is not a related party? Directors and KMPs of joint ventures and associates are not related. If you are an associate or a joint venture, typically your holding would be less than 50%, and you are not supposed to have control over that entity. So directors of a joint venture or associate is typically not considered a related party unless someone can demonstrate that you are controlling or taking decisions in both the entities. Directors having less than 2% in public companies, and a person appointed as a senior managerial personnel in a company, holding company, subsidiary or associate, he should not be a KMP. If he is a key management personnel, he automatically comes as a related party. But if you are just a senior manager, then you cannot become a related party. Which transactions are covered? Now, these are the transactions which are covered under that section 177, which is there, which was also listed earlier in a slide. This is put in a different way. Sale, purchase or supply of goods or materials, any property, leasing, any services rendered, appointment of agents, any related parties, appointment to place of profit. That covers anywhere, whether you give him commission, whether you give him salary, whether you give him, say, stipend, everything can be covered here. Underwriting the subscription of securities or derivatives of the company. All such transactions are covered by Companies Act. And there are threshold limits for RPT. So it may be a related party transaction, but for approvals under the Companies Act, there are some threshold limits. There is no threshold for reporting. Reporting, everything needs to be done, but for approvals, there are some thresholds which are there. So the company shall not enter into transaction where these transaction limits have exceeded. So you have this sale purchase where it's 10% or more of turnover. Um, for services also at a similar thing. If you appoint anyone as a remuneration at up to rupees 2.5 lakhs, you don't need approvals, but 2.5 lakhs and above, you need approvals at various places, maybe shareholders or audit committee or wherever. Remuneration for underwriting exceeding 1% of the net worth. Now, in case the transactions exceed the above limits, prior approval needs to be taken from shareholders through a resolution. Now, this also applies to private limited companies, subject to maybe some few exemptions which may be still available as such. What is office or place of profit? Where office or place of is held by a director if the director holding it receives from the company anything by way of remuneration over and above the salary, fees, commission, and so on, that also is considered as a place of profit. Where such office is held by an individual other than a director or by a firm, private company, etc., that also would be covered in this list of transactions. What is ordinary course of business? Now, ordinary course of business is not all resolutions, all approvals say that the transaction is in the ordinary course of business, but that phrase is not defined under the Companies Act. However, that phrase would be defined or is referred to in your standard on auditing 550, which is specifically on related parties. How do you verify and report on related parties? They have given you few examples of which transactions will fall outside the purview of ordinary transactions. So if there are complex equity transactions, they would not be called in the ordinary course of business. If you have anything with offshore entities, the leasing of premises to another entity, if no consideration is exchanged, sale transactions with unusually large discounts or returns, transactions with circular arrangements, for example, sales with a commitment to repurchase, these are not considered to be in the ordinary course of business. Everything else other than this is considered in the ordinary course of business. Now, this, as I said, is not directly defined in the Companies Act, but this comes indirectly from your standard on auditing 550, which is telling the auditors how do you verify related party transactions. Arm's length. Arm's length is, every day we use this word so often, but it is not something very easy to understand and report on whether something is at arm's length. So it means a transaction between two related parties that is conducted as if they are unrelated, so that there is no conflict of interest. If you give an interest-free loan, if you give a loan at a lower rate of interest, if you give a loan with a different period, if you give a loan without security, all these are normally considered other than at arm's length, because you will not give such loans to unrelated parties in that sense. So from a common parlance, it appears that to demonstrate, the company will need to show that the existence of special relationship between the parties has not affected the transaction and its critical terms, including the price, quantity, and other terms governing the transaction. Terms of transaction should be comparable to those with unrelated parties. An establishment of arm's length can be in any one of the following: a similar transaction entered with unrelated parties at the same terms and price and during the same period, a market quote for similar transactions, and prevailing market rate for a particular transaction. Now, this in practice can sometimes become difficult, but whenever you have a related party, as auditors, as advisors, when you have to justify to the tax department, you have to provide something like this to justify that it is at arm's length, because this is a normal question which is asked at so many times that even the tax department will ask you that you have paid so and so to your sister concern for sales and purchases. Please justify that this is at arm's length basis and there is no overpricing or underpricing there. So these are just guidelines. In practice, you will have to really decide what is the best way in which you can justify something to be a related party transaction. In practice, there are also ways in which people try to overcome this. They say that, okay, I'm getting 3 quotations, but sometimes in an audit, we have found that all the 3 quotations come from the same address. There are 3 different names, but all the addresses are same in all the 3 quotations which are there. Now, all this, if it is done and the regulators detect it, not only will you not be allowed that transaction, but you may also get penalized because you are trying to, in simple words, as I say, fool the government. And today, I believe the government is much more smarter with their data analytics information which they can find. So even as auditors, this is something which is, if we find, we actually tell the company that if you are trying to do something like this, we are going to get into much more checking and much more in-depth checking about all your transactions which are there. There is also a provision of omnibus approval from an audit committee. This may not apply to each and every company, but every company which needs an audit committee, it could be even private companies above a size which need a audit committee. So if there is an audit committee, then you need an omnibus approval from an audit committee, and the AC, which means audit committee, has to specify the criteria after discussion with the board for which omnibus approval is sought. Maximum value in aggregate year per transaction, extent and manner of disclosure, review at what interval, transactions which cannot be subjected to omnibus approval, and so on. Now, when it says omnibus approval, there is also a provision of prior approval. Omnibus means a blanket approval of a transaction, and it has to be a prior approval. A lot of people say that I am taking a prior approval in the month of May when I am holding the first audit committee meeting, and I will take a prior approval for all omnibus transactions, say up to a particular limit. In practice, if you do that meeting in May, your transactions of April are all without approvals because you neither have an approval nor an omnibus limit in the month of April. So we have typically told almost all the companies which go for this that please hold the audit committee meeting in the last week of March, because only in March you can take a omnibus approval for the next year on a prior approval basis. Otherwise, that 1 month, 45 days are all without prior approval, and technically it's a breach of the sections and you will need to ratify those transactions. And regulators can tell you that these transactions are not as per the Companies Act in that sense. Okay. All omnibus approvals are valid only for 1 year. You have to do it again every year. And the audit committee may make omnibus approval up to 1 crore, which cannot be foreseen and for which details are not available. So what that means is omnibus approval, the provisions say that if I am say paying rent to someone in my sister concern or a related party, I have to say that during the next year, I will pay rent of say 25 lakhs, and that's the omnibus approval. Say my rent is 2 lakhs per month, so I take omnibus approval of 25 lakhs. However, there could be transactions with a related party which I cannot envisage in advance. So I know that I am going to have transactions with a related party, but I do not know what sort of transaction. Could be purchase and sale, could be giving staff to them, could be renting out something. Now, the law says that if you want to take a blanket approval for a particular related party without giving the nature of the transaction, you cannot take it for more than 1 crore. So that omnibus approval without details, without giving the nature of transaction per party, it cannot cross 1 crore rupees, which is there as such. This may look very simple, but in practice, take the case of a large bank. And if a bank has to take such approvals, it can become very difficult because a director of a bank will always put money in his own bank, correct? Now, if a director puts a fixed deposit in his own bank, it needs omnibus approval. And it needs omnibus approval up to a particular amount. Now, if that amount is not known, you will have to go and take some blanket approvals like this, or you may have to take blanket approvals of the for maybe a particular family of directors. That this family of directors, we take a blanket approval of say 5 crores or something for placing their fixed deposits, or even a savings account where you pay interest. That also is covered under this related party transaction, section 177. RBI may not come in the picture because RBI refers you back to Companies Act. So even any bank which you take, HDFC or anyone, they are all limited companies and they are all going to follow these provisions which are there. And for a bank, this is one of the most difficult things to follow. Luckily, I believe at branch level, you don't need to really get into these details, because at bank branch audit level, all this may not be really necessary to be verified. But for all approvals under Companies Act, we have made a tabular thing like this. So is a transaction with a related party? If that is no, there is no action, which is fine. But if it is yes, you find out whether you need prior approval of audit committee. Is the transaction covered under section 188, which means below those thresholds which were there, then I don't need to take any action. But if it is covered under 188, then I have to see, is it at arm's length and in the ordinary course of business? Is the prior approval of the board necessary? What is the paid up capital, or does the transaction exceed the prescribed limit? If yes, then you have to even go to the shareholders. So the approvals are at 3 levels: audit committee, board, and shareholders, depending on what is the size of the company and what is the nature of transaction. There is also a disclosure required in the board report as well as the financial statements for all such transactions which are there. And the notes here below which are there, do write what are the threshold limits, that in case it is less than 1 crore, you don't need to do this and that. I am going to leave this presentation here, which you can refer. I am sure you cannot even write down all these things or even remember all these things in the first instance, unless you are really applying it for each separate transaction. And you have also this disclosure under section 134(3)(h) of the Companies Act, where all contracts in arrangement with the related parties have to be in a particular register. It's called Register of Contracts. And with all related parties, you need to enter this. So this is part of the secretarial compliance, which clearly also applies to a private company. And sometimes we don't see this because it is not concerning my financial statement, but this is equally important. And it is prescribed as per this rule 8.2 of the company's accounts rule 2014. And the report of the board will also contain particulars which are there in related parties as per 188, and that you give in that form AOC 2, which is filed with the ROC. Okay, so that was the Companies Act in that sense, the first thing which was there. Then you go to this IND AS 24. The core principle of IND AS 24 is to ensure that an entity's financial statements contain the disclosure necessary to draw attention to the possibility that its financial position and profit or loss may have been affected by the existence of related parties and by transactions and outstanding balances. So all that this standard says is, we are not concerned about whether you need approvals, don't need approvals or whatever. It says that we are only asking the company to disclose what are related parties, what are the transactions, so that the reader of the financial statements can understand the implication of that financial statements either on my asset liability position or on my profit or loss position which is there. And that is why in this IND AS, they are aggregating lot of information, because if you don't aggregate information, you will not understand. Your RPT disclosures will run to maybe 40-50 pages and you will not understand what is the implication of it. And that is why they are asking you to aggregate per related party or per nature of transaction after having giving a list of related parties. So the standard is applied to identify related party relationships and transactions, identifying outstanding balances, including commitments between an entity and its related parties, identifying circumstances in which disclosure of 1 and 2 is required, and determining the disclosures to be made about these items. When it comes to IND AS 24, or even maybe the earlier approvals which you need under Companies Act, even if you don't have a financial transaction, it may still get triggered or covered. For instance, you don't give loan to someone, but you give a guarantee to a subsidiary for a loan taken by the subsidiary. That also is a related party transaction, which will need to be disclosed. Today, of course, when you give a guarantee to a related party, people have started charging some commission or some charges, because in international transfer pricing, they are saying you are not giving guarantee without any, you cannot give it free. There has to be some quid pro quo for it. And that is why you have this 1%, 2%, which is considered in international transactions which are there. All that again gets disclosed under this IND AS 24. This is the definition of a related party in the IND AS 24, and this is much broader than the other definitions. So what is a related party? A person or a close member of that person's family is related to an reporting entity if he has control or joint control of the reporting entity, has significant influence. Significant influence typically means anything more than 20%. That significant influence is a member of the key KMP of the reporting entity or of a parent of the reporting entity. And an entity is related to a reporting entity if any of the following conditions apply. The entity and the reporting entity are members of the same group. One entity is associate or JV. Both entities are JV. One is a JV of a third party. Entity is a post-employment benefit plan. So if you are a provident fund plan, if you are a gratuity fund, all that automatically become your related parties. And a lot of companies, instead of just making a provision for gratuity, you have a gratuity fund which maybe and you deposit that money with the insurance company. That gratuity fund where the directors will never be involved, some employees may be involved. In spite of that, it will become a related party because it is controlled by the main company which is there. Key management personnel, all persons having authority and responsibility to plan, direct, and control the activities of the entity, directly or indirectly, including any director, whether executive or otherwise, of that entity. This definition gave initially a lot of debate about whether independent directors will also become KMP and whether they would become related parties. The answer is yes, they do become KMP because they have the authority for responsibility planning directly or indirectly, because it says including any director, whether executive or otherwise. So independent directors also are now covered in the list of KMPs, but you are writing there clearly they are independent directors. Most companies now give the list of independent directors also in the list of related parties. And a CFO, a company secretary automatically become related parties because they are now automatically now KMP because of this definition of IND AS 24. A lot of people hesitate doing this because when I write a CFO or a company secretary as a related party, his remuneration goes in the financial statements. So they resist, but they have no option but to show this remuneration also which they receive in the financial statements. Close members of a family or person. So it says close members are those family members who may be expected to influence or be influenced by that person in the dealing with the entity, including the person's children, spouse, and domestic partner, and so on. Here, relationship doesn't matter. The fact that you are able to influence each other matters more. So if you have two brothers and the company demonstrates that one brother cannot influence my decisions or otherwise, those two brothers may not be related parties. And that disclosure will not come then as per IND AS 24. Now, this is not there in the AS 18, but in IND AS 24, you can have two brothers, even a husband and wife, because it's typically said you cannot influence decisions of a wife or a husband in that sense. So if that is there, then they may not become related parties. It's not always, but they may not become related parties if you can prove that they cannot influence each other. So you have this whole circles which you have to see what really becomes a related party. Joint venture, joint control, control, parent subsidiary. So wherever you get into this joint control, control or significant influence between these entities, they become related parties. What finally you have to see is whether I have a joint control or whether I have just control or whether I have significant influence. So here it goes more from the substance of a relationship or the nature of relationship rather than the form of relationship. I may not be related at all to anyone else, but if I am able to exert significant influence on the decisions of the other entity, then it can become a related party. And as we have said there, non-executive directors are also deemed to be KMP, which will also include your independent directors. How can you achieve control here? We have control at two places, joint control and control. And control can be by ownership, which is very easy to establish. I hold more than 50%, that's control. I can also do it by way of controlling the composition of the board. So if I don't have shareholding, but I have a majority on the board, that also is control, or by way of substantial interest of voting power. I am given that voting power by way of, say, some proxies or something, that whenever this decision's there, you have to decide, and my voting power is with that other person. That also can establish control. Okay. So if you take this simple example, you have a parent, you have an associate 1, subsidiary A, subsidiary B, C, associate 2, associate 3. Now associate 1, 2 and 3 are not related to each other. Parent, subsidiary A, B and C are related to each other and to associates 1, 2 and 3. Now who will be related parties in this as per this definition which is there? If you see this, this is something you'll have to figure out yourself, what is it? But basically you'll have to see at the control chart. But this is very typical in practice, that the associate 2 and 3 are not really related to the parent, but they are only related to my subsidiaries. Then whether that associate becomes a related party, say, or the parent, or even for that subsidiary A in that sense. If you have a key management personnel X in entity A, there is an entity B and entity C also, and this X has 100% investment in entity A and is a member of KMP of entity C. For entity C, A would be related as X controls entity A. A is also related if X is a KMP of entity B and not C. And for entity A, C is related. For entity B, entity A is related. But B and C are not related. The definitions, you'll have to look at this whole 3 circles which I said. You'll have to look at that, and we sometimes need to do this year after year when some shareholding changes or some resolutions are passed giving rights to some person or something. So if a person is an investor, person X has an investment in both entity A and B. So in X, 50% control, in X over B, 20% interest, both are related because either I am controlling or I am having significant influence. In A, 20% interest, in B, 50% control, obviously again related. In A, I have 20%, in B, I have 20%, may not be related if that significant influence may not be demonstrated. Otherwise, it will become related in that sense. Close members, a similar example where X is 50 in this, and then it will be related or unrelated depending on how you are able to establish this. If you have an entity with a joint control, you have entity A, B, and C. Entity A has both joint control in B and joint control or significant influence over C. For entity B, entity C is related. For entity C, B is related to C. C is related to B for B, and for C, entity B is related to C. When it comes to government related entities, they are exempt from disclosures. So if there are transactions between 2 government owned entities, and it will include both central government and state government, they are exempt, including commitments, outstanding balances. If the government that has control or joint control or influence of the entity or any other entity, that's a related party because the same government has control, and it does not include companies which are promoted by a state government. It will only include companies which are directly owned by the government in that sense. To give you a simple example, if you have got, say, in Gujarat, if you have got, say, a transaction with GNFC and GNFC has a transaction with GSFC, they may not get this exemption because they are not really in that sense government companies. They are semi-government bodies in that sense, and they may not get this exemption of not reporting each other's transaction. So if the reporting entity applies the exemption, it will still disclose about transactions and related outstanding balances. So even if you don't disclose everything, this much will still need to be disclosed as per IND AS 24 for transactions between government entities. Now here you have a very simple government G, X, entity 1, A, B, entity 2, C and D. The exemption applies to transactions with government G, transactions with entities 1 and 2 and entities B, C, and D. Exemption does not apply to transactions with person C, though he may be having ownership in entity 1 and AB and so on. Lot of disclosures are there in IND AS 24. Relationship between a parent and its subsidiaries have to be disclosed irrespective of whether there are transactions. So if you look up the financial statements of a company like Hindustan Unilever, you will see a list of related parties, which may be 100 parties. You may not have transaction with all of them, but you will still need to give that list. Most of the multinationals which are there. And you also need to disclose if neither the entity's parent nor the ultimate control party produces consolidated, the name of the next most senior parent that does so shall need to be disclosed. Shall also disclose KMP compensation in total for each of the following: short-term benefits, post-employment, long-term termination. And this is where your CFOs are not really very happy, because all of this get disclosed for CFOs also. What he will get on retirement, that also gets disclosed here because of this clause. If an entity obtains KMP services from another entity, it is not required to apply the requirements to the compensation paid or payable to the other entity's employees, because it will get disclosed in that entity. The disclosures required can be made separately for each of the categories. Parent, so this is that aggregation. So what, if I make payments to a parent, subsidiary, associate, joint ventures, I can aggregate them. So when I say KMP, I can aggregate some of the payments or things which I'm related party transaction to each of these persons who are there. Now, FRRB also closely observes what are the disclosures made by several companies in their financial statements, and SI on this FRRB has observed that a subsidiary had received borrowings from financial institution. Details of the borrowings were not available. And as per financial statements of the holding company, it was noted that there were corporate guarantees which were issued. However, neither the guarantee commission was recognized as per 109, which is a different matter, but the disclosures under IND AS 24 were not made in the financial statements of the subsidiary company. There were no transaction, only a guarantee given by the holding to the subsidiary. But in the subsidiary, it still becomes a related party transaction, because I have taken a guarantee from a holding company, though I have not made any payment for it as such. And FRRB observed this in some of their observations. It was also viewed that an expense on account of waiver of interest receivable is a bad debt. And since that was for a related party, that disclosure should have been done. Sometimes with the related parties, you waive your interest. The subsidiary is not doing well. You say, okay, I'm not going to charge interest. The fact of the waiver also is a transaction which needs to be disclosed. Because in the whole year, I am not having any interest which is charged, but the fact that you have waived that interest also is a disclosure necessary under IND AS 24. Okay. Now these are FRRB observations, which they would have seen obviously in the bigger companies. FRRB normally reviews the bigger companies, and they have observed this. So that's IND AS 24, which is a little complex situation, because that applies to all the listed entities and all entities with a net worth of more than 250 crores, which is there. When you come to AS 18, it applies to all these things which are there. A lot of things are similar to IND AS 24, but they would be little simpler as compared to IND AS 24. And it says the following are deemed not to be related parties: two companies having a common director, a single customer, supplier, franchisor, or general agent, parties listed below in normal dealings. In IND AS, all this doesn't come, because in IND AS, they go with the concept of control. They say that if you are able to control each other or the other party, then automatically you are a related party. I don't need to then get into the such specifics under IND AS, but in AS 18, you will have some of the specifics which are there. The definition of relative or family members, again, there takes you back to the Companies Act. It's clearly defined there: husband, wife, son, daughter, son-in-law, and such things. It doesn't say where relationship may be there. It just goes by the relationship. It does not go by the substance. It will really go by the form. And when you come to AS 18, these are the disclosures which are necessary, which of course we do for most of these private limited companies which are there. And here it clearly talks about disclosures can be aggregated by type of related party, where separate disclosure is not necessary for an understanding of the transactions. The third or the next thing which we discuss is SEBI amendments to RPT, which was effective from 1st April 22, but for 22-23 this applied, and 23-24 they are further strengthened the regulations which are there. Clearly this applies only to listed entities, but we have a lot of finance companies or NBFCs which are not very actively traded but which are still listed in that sense. Maybe the listing could also mean in the SME listing, SME exchange which is there. You can also have your debt listed. Okay, so only if your debentures are listed, these amendments will still apply to you, because any listing which is there, you will have to follow these disclosures which are there. So, pardon? Listing of? It's a debt, no? So I don't think there are any exemptions for commercial people per se. But anyway, that's a regulation which you have to see which entity it applies, doesn't apply. For debt, most of the things it now applies, all these regulations apply, the LODR applies to them, including this 45 days and 60 days of publishing their results. They all started applying in this year. So related party, earlier they were taking you back to section 276 of the Companies Act and the applicable AS or IND AS. And even the promoter group, it was clearly defined. The modified definition is, it says, just says promoter or promoter group irrespective of holding. Earlier it was getting restricted to only 20%, more than 20%. Now it says even if you hold 0.01%, you are a related party, and if you are a promoter in that sense. So if you have a child who is born in the family and the promoter says, I am gifting 100 shares to my grandson or granddaughter, whoever is there, that person automatically becomes a related party in the main company, because he is part of the promoter group. The holding, how much percentage doesn't matter now. Earlier it used to be more than 20, now it doesn't matter. And they've also added any person or any entity holding equity shares in the listed entity, either directly or on a beneficial interest at any time during the immediately preceding year, 20% or more in the last year, and now only 10% or more. So take off big investors who are there. There are a lot of investors, and you read in the press that we have an investor individual capacity or in a company which he owns, he has invested say 15% in some other listed company. And you read that regularly, that so and so investor has invested so much in say Titan Industries, or it has invested so much here or something. Now that person will automatically become a related party now, because his investment, if it is more than 20% up to March 23, and after March 23, if it crosses that 10% threshold, you automatically become a related party. You may not have any transactions, but even if you have paid dividend to that person, that also can become a related party transaction. So SEBI is going all the way, frankly, to get disclosures on related parties. So this is the definition of a transaction, which is now replaced by a definition which says something again which is very wide. Now, if I have a holding company and the holding company has 2 or 3 subsidiaries, earlier I was reporting only transaction between the holding company and the subsidiary. And the holding company was not otherwise impacted if there were transactions between 2 subsidiaries. Now the provisions say from April 22 that even if you have a transaction between 2 holding company, between 2 subsidiaries, that also becomes a related party transaction, for which you need to report as per LODR. It will not become reportable under IND AS or under Companies Act, but it will become reportable under SEBI. So if you have got, say, Reliance Industries, it has got 100 subsidiaries. Each of the 100 subsidiaries, out of that 100 subsidiaries, Reliance has transactions only with 10 subsidiaries. But the remaining 90 subsidiaries do a lot of transactions between each other, not with Reliance Industries. Now, from April 22 onwards, all transactions between those 90 subsidiaries also become reportable in the balance sheet or in the financial statements of Reliance Industries, not necessarily in the balance sheet, but at least to SEBI every quarter on quarter basis. You can imagine how big is the job of even compiling these transactions, because any transaction between those 90 subsidiaries, my main company is nowhere concerned with it. They will not even know what are the transactions. But now from April 22, they become reportable in the holding company's RPT also. Luckily, SEBI has now said that if you have got corporate actions, you don't need to report that. Corporate action means it is not preferential to anyone. It is an action like payment of dividend, like subdivision of securities, buyback of securities, applying to everyone. Then it doesn't get disclosed. For banks and NBFCs, they are saying that please don't disclose any payment made by way of interest on a FD or interest on a savings account to your related parties, because they are being paid as per the normal rates applicable to public. So that exemptions is there in SEBI. That exemption is not there in Companies Act or the IND AS in that sense. So for audit committee approvals, you need a prior approval for all RPTs. The new modification is there are some exemptions given, but for others you need approvals. This again, you can have a look later on. Shareholders approval. After audit committee, it will go to the board, but for a lot of transactions, it will need shareholders approval. And again, the provisions are quite stringent. And that is why when you see this year's notice for annual general meeting, you will see a lot of permissions which a company is asking for related party transactions, mainly because of these new provisions which have come. There are several exemptions also. Government company exemption is there, but it now exempts two wholly owned subsidiaries of a listed entity. It doesn't exempt all subsidiaries, but if there are two wholly owned subsidiaries, then it exempts transactions between them, because then it is anyway captured at the holding company level on and eliminated on consolidation. To the stock exchange, earlier it was within 30 days. Now it says every 6 months within 15 days from the date of publication, and from April 23, every 6 months on the date of publication. So the date I publish my results, same day the list of related party transaction has to go to the stock exchange. And the format is very, very stringent. If you see the format which is there, I think it's there somewhere in the annexure which is there, but that format is very stringent where a lot of transactions do get captured. So this is again a summary of all approvals which you need under SEBI LODR, just as you had a chart for approvals under the Companies Act. This is a chart for all approvals which you need under the SEBI LODR which is there. This is a list of transactions which are excluded. The right hand side is the SEBI exclusion, which is the updated one. But if you see that last thing, there is no such exclusion under AS 18 or IND AS 24. So for someone who is auditing a listed entity or someone who is involved in advising a listed entity, they will apply all the exemptions when they report to SEBI, but when they are reporting the transactions in the financial statements, there is no such exemption which would apply. Okay. So for instance, when you pay a dividend to all your shareholders, you will also pay to your directors, promoters, and so on. SEBI says since it's a corporate action, we don't need that information. But IND AS 24 doesn't give you that exemption for corporate actions. So you will still say that dividend paid to my promoters or directors or KMP or whoever is there. So this is again a summary of where all you need permission between Companies Act and SEBI. So between the Companies Act and SEBI, if the reporting entity is ABC, the other entity is a wholly owned subsidiary, as per Companies Act, you need approvals. As per SEBI, you don't need approvals. If ABC has the other entities, promoters, directors, and so on, it is yes and yes. Both places you need approvals. If it's an associate or entities with significant influence, again, both places you need approvals. Wholly owned subsidiary, both places you don't need approvals. Subsidiaries, other entities, you don't need approval under Companies Act, but you need approvals under the SEBI LODR. And subsidiaries, directors and KMP, nothing under Companies Act, but you need a lot of permissions under SEBI LODR. Frankly, when we have a company which is trying to get a listing done, you have to make them aware about this compliances on related party transactions. unless they say it's a professionally managed company, and we will not have much problem in getting those details, because SEBI is going sometime much more than Companies Act in even getting approvals for the related party transactions which is there. This is approvals from audit committee. When it comes to approvals from shareholders, again, there is a difference between approvals required as per Companies Act and approvals required as per SEBI LODR. Some places you will see yes, yes. Some places you will see not applicable or not required, depending on what is the transaction and between what entities is the transaction which is there. And if you go back to the earlier slide from audit committee, in lot of cases, you may even need prior approvals. Even from shareholders, sometimes you need a prior approval. Reporting, this is the format which I said is there. So disclosures every 6 months, which is the annexure to SEBI notification. So you just see the list of disclosure, name of RP, listed company or the entity detail. Now, whether that disclosure is applicable under IND AS or not, and what is the disclosure required under SEBI. In SEBI, everything is applicable. Some of the things are not applicable under IND AS also. SEBI is, as I said, going overboard in disclosures also, as well as getting approvals for various transactions. See the last thing, opening closing balance, if monies are due, even if there is no RPT, you will need to disclose value of RPT as approved by audit committee. I don't need under AS or IND AS, but I still need to do that under multi-layer aggregate value of RPT. Additional disclosures once in the reporting period in which the transactions are undertaken by the listed entity or a subsidiary. Now all these disclosures are required for SEBI. They may not be required under the standards, but they will still be required under SEBI. There are some issues which you will need to, this is frankly the last slide, but these are the issues which we can debate, where the names of all RPs need to be disclosed even if there are no transactions during the period. And if you go back to the definitions of related parties and all, they are saying that if you are in a position to control the other entity, then you will have to give a list, even if there are no transactions during the year. It was there in one of the slides, which is there. Exemption for disclosure of dividend paid by the company to the related parties from which financial year. Now, as I said, in SEBI, you need not disclose corporate actions. In IND AS, you still need to disclose it. Now, can you say that I may still not disclose it in the IND AS or AS? And further, what happens to a company which is in the process of getting listed? Whether I will do that or I will not do that. So it is in the process of doing its DRHP and other things, whether I will do or not do. Whether company needs to disclose a CSR trust or a provident fund or a gratuity trust or public charitable funds controlled by promoter family as their related parties. If you see some of the definitions which we saw earlier, a provident fund, gratuity trust gets covered because the employees of my company normally are the trustees over there. So you can exercise influence over them. You can very well tell your employee that if you don't take the decision, I will remove you from the company. So it's an indirect way of controlling the trust. What about a CSR trust? Will that become a related party? So take, for instance, large CSR trusts which you have by corporates. You have a TCS Foundation, you have a Reliance Foundation, which you see ads all across the place. Do they become related parties or do they not become related parties? If you look at the definitions on significant influence or control, they will become related parties. The parent company's directors may not be at all involved in that CSR trust, but the very fact that they are able to control some of the activities or guide that trust as to what all activities they would do, that itself would mean that it's a related party. And if it's a related party, whether you are able to control or not control, it also can lead to something like whether you can consolidate a CSR trust or whether you can consolidate a provident fund. So if you have got a TCS Foundation and you say it's a related party because of control, as per that IND AS 110, which is on consolidation, will you be able to say, because I'm controlling that trust or the CSR fund, can I also consolidate? What is the benefit in consolidation? The huge bank balance of that trust adds on to my bank balance on consolidated financial results. It doesn't impact my profitability in that sense, but it can clearly show on a consolidated basis a very high cash and cash equivalents. So whether that is possible, whether that can be done, again, different companies take different views on whether you. So there are two questions here. One is firstly whether it's a related party, and second is if so, whether I can also consolidate that in my with the holding company. What if services are rendered without any consideration or at a nominal consideration? This in all the statutes which we discussed, whether it is SEBI, Companies Act, or income tax, or maybe even your GST, it is a related party transaction, and the necessary implications can get triggered. In Companies Act and IND AS and all, it's only a question of approvals and disclosure. If it is Income Tax Act, it can have tax implications. If it is under a GST Act, it can also have tax implications. And tax implications in GST may be without able to get the credit under ITC, because you are voluntarily notional basis charging GST on a notional transaction of not charging rent to a related party. For all, no, I understand. This mic has stopped. So I think your question is to be done in two things. One is whether it's a related party, then it is disclosed as a related party. The second is, do you want to consolidate or not? Again, as I said, practices are mixed. Some consolidate, some don't consolidate. So it clearly depends on the intention of the company, what it wants to do. Typically, I would prefer not to consolidate, though it's a related party. All related parties, I don't automatically consolidate in that sense. But there are companies who say that because I'm controlling, let me consolidate because I'm getting a benefit by consolidating. And in such cases as auditors, I don't think you will be able to object too much, because 110 also works on the concept of control without even any shareholding in that sense. So you may not be able to say much in that sense, except maybe some disclosures which can come in. In consolidated, there are no tax implications, no, in that sense. It's just consolidated financial. It is no more for analysts and showing to the world that, see, I have got such a huge cash and cash equivalent in that sense. So for the disclosure purpose, whether comparative figures are needed to be given, that's 100% yes, because some companies say that I will not give comparable disclosures for the earlier year. That is not allowed anywhere. You will have to give comparable figures unless you can prove that in the earlier year it was not a related party and it has become a related party only now. Can arm's length pricing definition be different under different statutes? How do you deal with this? Because a lot of people say that I am at arm's length under Income Tax Act, but I may not be at arm's length under some other statute. I will look at it in a different way. Could be very difficult to say that in one statute you are at arm's length and in another statute you are not really at arm's length in that sense. And is there any penalty for non-compliance of disclosure and reporting requirements? That you have to ask FRRB, because FRRB has penalized companies for this, and more than FRRB now, you have to ask NFRA. NFRA is going to heavily penalize you for not giving disclosures under IND AS 24. NFRA is not concerned with AS 18 because they don't look at private companies or smaller companies, but clearly IND AS 24 disclosures not done, they will get penalty and other things. Not only the company, but even the auditor concerned can get penalized. RBI, if you have seen the press over the last 1 or 2 years, there was a big group of NBFC companies who got insolvent. They are now into IBC. And one of the reasons for them getting into IBC and insolvent is related party transactions. And RBI actually had penalized the audit firm who was auditing that entities, that we are not going to allow you to audit any bank or NBFC for a period of 3 years. So RBI has that power to ban someone from even auditing that company, where they have found that the auditors have not done a good job of identifying and reporting related party transactions. Income Tax Act, of course, they can penalize you, because if you forget to write something under 48(2)(b) and it comes up to be a related party transaction, clearly under tax audit also you can be penalized, and it can anyway penalize the company by saying that you misreported information under that return and that form 3CD, which is there as such. So related party transactions, normally we say that when you have transactions between related parties, it is nothing but putting something from one pocket to the other pocket. The regulators don't think so. The regulators don't think so. And if the regulators don't think so, and the people who draft the statute don't think so, I think as auditors also, we cannot allow that to happen, because for common people, it is one pocket to other pocket. For us, they are clearly reportable transaction, whether they are arm's length or whatever it is in that sense. All right. So I think this is the last thing, but this was quite a bit on related parties. I'm going to leave this presentation. You may need to refer it again, because even our office took a long time to really prepare this, a compilation, a comparative and other things which is there. Okay. If there are any queries, I think we can take some time, 5-10 minutes. Otherwise, I think
or government authorities. Otherwise, because shareholders are not interested in all these transactions.
so shareholders are interested, because they would like to know how much I am paying to my sister concern, how much I am paying to my director. And you have got people where they say that if the company has made a loss, and if I'm paying my managing director, who is a promoter director, why is he getting paid so much? Because the company is not doing well. So shareholders who are knowledgeable are interested.
Oh.
Sir, AS 18 and Companies Act related party definition has slight difference. So non-IND AS company, when we are going for a disclosure, which act to be followed? Companies Act to be seen or AS 18?
So when you disclose to ROC, you follow the Companies Act. When you disclose in the financial statements, you follow AS 18. You'll have to distinguish between the two, or sometimes to avoid that something missed out, we disclose whatever is higher in that sense.
And sir, one more thing. What is the ordinary course of business? Giving an example, suppose a company is in the business of manufacturing steel, and they have one subsidiary. And for that subsidiary, they give some advice, only one transaction, and they charge up consultancy services to subsidiary. Is it an ordinary course of business or it is non-ordinary course?
It would be not in the ordinary course, because it has not done anything like this in the past, even with non-related parties. So if it does something which is different from other things, then it's not in the ordinary course of business. And that is what that SA 550 has said. Something which it has normally never done will not be in the ordinary course of business.
Thank you.
So fine, I think let's wind up.
I think indeed a good session before we start the audit season to think through. As he rightly said, provided management and the people at the helms of affair agree, it's better to give a disclosure which is higher in terms of all requirement. With this, let me request Jyoti to propose a very well-deserved vote of thanks to Himanshu Kishnadwala, sir.
I am pleased to be standing here on behalf of all participants to convey my gratitude and vote of thanks to Himanshu sir. Himanshu sir deserves special recognition for accepting our invitation and explaining such a vast topic of related party transactions, starting from identifying related parties, correlating related parties under various statutes, and also reporting requirements under various statutes. Let us give applause and heartfelt appreciation to Himanshu sir.
So friends, with this, we complete day 1 of our national conference. See you all tomorrow morning again for D2 at 10 a.m. sharp. Thank you so much.